So party C gets a new insurance policy
Hmm.
and they want it to be added to the PITI.
Hmm.
Then party B will execute on the power of attorney in order to help party C add it into the PITI.
Yes, you're talking about A, B,
So
C situation. Party B now has power of attorney over A, the seller's accounts. So
yeah.
party B staying in the deal, surprise, may still have to do some work to accomplish the sale to C and to continue managing the accounts, the insurance or mortgage or whatever else the seller that they've got authority over, because they're not granting power of attorney all the way to party C, the end wrap buyer. In a wrap situation, the buyer pays taxes and insurance. I'll just take insurances out of the question. Taxes are due from the property owner. So in a wrap where title actually transfers, that person must pay the taxes, whatever they happen to be. Sucks if you have a property that hasn't sold in 30 years in California and it gets reassessed. You better factor for that before you buy it. Yeah, so that's the owner's problem. And even in most contract for deed situations, the seller will indicate that the buyer pays all taxes and insurance on the property as well. It's everything but the deed for a contract for deed or a land contract. So the buyer's expected to pay all of that already. The only time the buyer doesn't pay that stuff is in a lease.
he already purchased the property subject to, and now he's wrapping it.
Yeah.
So he's charged him $1,940 a month for principal and interest. The taxes and insurance, would that be part of the servicing? What they pay to servicing, or is that separate?
It can be paid through servicing, but the taxes and insurance are a separate charge. The principal and interest is going to stay the same for the life of the loan. Let's just assume a 30-year mortgage that stays. So you pick and stick, and that's going to be your principal and interest payment combined. The total is going to be the same every single month for 30 years, but the allocation of principal versus interest is going to shift over time. But the total will still be $1,090 or something like that. Taxes and insurance is on top of that. Taxes and insurance are variable and they will increase over time. Meanwhile, the baseline principal and interest never changes.
Okay. And in this case, since they are getting their own insurance, you would have to, because the POA is only for the seller, right?
You're talking about A, B,
So,
C situation. Party B now has power of attorney over A, the seller's accounts. Yes.
right.
Party B staying in the deal, surprise, may still have to do some work to accomplish the sale to C and to continue managing the accounts, the insurance or mortgage or whatever else the seller that they've got authority over, because they're not granting power of attorney all the way to party C, the end wrap buyer. That's a retail wrap buyer or somebody else that doesn't even necessarily know the seller, nor does the seller know who they are. Party B gets paid to stay in the middle and do some work, basically. It's not free.
And what does that work entail exactly?
If a change needs made with the account, if you have to call in and ask for a copy of a payoff statement or whatever ends up coming up, you're the main point of contact now.
Okay. So party C gets a new insurance policy
Hmm.
and they want it to be added to the PITI.
Hmm.
Then party B will execute on the power of attorney in order to help party C add it into the PITI.
Yes, in a sub two situation, this goes back to my earlier separate video recording, where if it's too hot, get out of the kitchen. You have to decide: are you going to carry two insurance policies or not? The original owner's insurance policy is void, but you can keep paying it if you're just wanting to reduce the likelihood of due on sale. If you think that's going to help you, I've got a separate video on that discussion, but you've got several options there. If you're getting rid of it, that's fine. You have to replace it. So yeah, you would have to be in the middleman. You'd have to actually work to place that new insurance. But that insurance paid through PITI is going to name party C the buyer, with party B as an additional insured and party A as an additional insured or additional
Yep.
interest. I get the two mixed up, so don't quote me on additional insured versus additional interest. That said, you can have two insurance policies on the property. If you've got servicing for B to C
Mhm.
and A, you might as well. If you're doing an equity or rate wrap, you're going to mark it up and you might as well have a servicer in the mix. Then you can still maintain the two insurance policies and you can escrow the insurance for the B to C purchase, whether or not you provide a copy of that insurance to the original mortgage. It does need to be insured and payable to that original mortgage, but you get into some secret squirrel shady stuff over there, and it's like you got to make your own decision. I'm not necessarily going to advocate for one over the other. If your risk tolerance is so low that you don't want to mess with the bank at all or communicate with them whatsoever, then you're just going to pay for a second insurance policy. In that case, back to your original question, who pays for the taxes and insurance? If party B is deciding to keep the old insurance in place as a risk reduction factor, I would say that's probably party B that needs to pay that, unless they disclosed The approximate monthly rate and the buyer party C agreed to make that payment.
Okay, gotcha. And if for any reason they want to make that switch, party B would do that on behalf of party C. And what about taxes though? If the tax gets reassessed?
So taxes get reported back to the original mortgage as a first lien holder. Taxes are
Right,
paid through an impounds account. So if the taxes go from 3,000 a year to 5,000 a year, the county is going to send a notice to the mortgage company
right.
of what the
And
tax
this,
bill is, and the mortgage company is going to adjust their monthly taxes and insurance rate on the statements to accommodate for
right.
that.
So taxes and insurance, they could either, the tax will automatically be updated and the servicing company would know to either charge the end buyer party C directly for what's owed, or they can add it into the PITI using it. Well, it's already added into PITI, but it would be handled that way.
Yep.
Insurance, same thing. Whereas either they can pay it, continue to pay it separately altogether directly to the insurance company and keep the existing one in place, or they can make the switch just like a regular substitute deal.
Yeah. I wouldn't say this the third party servicing company automatically knows about the changes. They do have to be notified somehow. So if your mortgage statements are not being sent to them, which they usually aren't, then they won't notice that change until there's a discrepancy in the payment amounts, and then it's just a minor correction. If you're watching mortgage statements and see when they go up, then there you go.
Okay. When we say day, you mean part of B or C or both?
B. B is probably the one receiving those mortgage statements, right? Yeah,
I think
that's why I
it's-
can't give you an exact answer because every deal has that as a variable. Whoever is receiving it, if they notice, they can send a note. They can send a copy of that to the servicing company and say, "Oh, taxes just got adjusted. Make sure you collect for this now." Either
So
way, if there's a
then,
shortage, it's routine. I've been through it. If there's a shortage
yeah.
on taxes and insurance payments for PITI, the buyer's going to have to pay it at some point anyway. So even if you miss a month or two, I missed 13 plus months because they never updated my payments. So I was paying what they told me to pay until suddenly they're like, "Hey, you're behind by a lot." I'm like, uh, just blindsided by it. So they wanted like 13
Yeah.
grand all at once.
Whoever holds that mortgage, who's already received that mortgage statement will receive that notice saying, hey, we've missed 13 months worth of taxes, whatever it is. And the servicing company usually is not the one that receives it directly.
Ideally, somebody's watching or reading their statements and noticing the difference and then sending a copy of any updated payment amounts to the third party servicer.
Okay. Is it more advisable that party B continue to receive those mortgage statements? Is that
I would
more
say so.
benefit? Okay.
I mean, they have a vested interest in the deal not going into default because they only get paid as long as the buyer's paying. And if the buyer screws up or payment structure gets messed up, it could lead to a default C to B and then also a default B to A.
And in loan servicing, B and C will get updates on payments being made on time.
Yeah,
Would party A naturally, or would they have to ask for it?
they would have to ask for it.
Cool. That helps. Thank you.